Welcome back. It's me, Adam, and you're watching Unlimited Options Investing. All right, in this video, I'm going to be talking about some regrets I have in life, specifically with the stock market, and 3, likely even 4 stocks that I lost a lot of money in, and not necessarily lost money in real losses, more so in cost opportunity. They cost me a lot in cost opportunity, you could say. So a few stocks that I just paper-handed, I sold them when they were going down or when they were still low, and they eventually just soared to go up to make massive gains that I wasn't a part of, even though I may have reinvested that money, so it's kind of okay. At the same time, just for the heck of it, I want to make that video. So if this is your first time on the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, my losses at my expense. As always, smash that like button and let's get started. All right, so the first thing that I'm noticing when I'm actually looking at the stocks that I missed out on is that I think I've made a video on them on this channel, like explaining my bullish thesis and then not buying into it heavy enough, or not buying into it and holding on to it long enough, or just not buying into it at all, or I don't know what happened, okay? So the first one would be Costco stock. This one is right now at $551 a share with a market cap of $244.4 billion. It is a very resilient business. During the lockdowns and the pandemic when it first occurred in March of 2020, Costco, Walmart, these were the kind of businesses that were still open, these big box retailers, when all small businesses were closing, and just everyone was still going to Costco and they were still making their money. Remember when the whole toilet paper thing happened and all the toilet paper was gone from all the shelves from all the stores? Costco was one of those companies. Over the last year, this company is up 48.95%. So even though we see growth over the last 5 years, the growth we saw in the last year, from the bottom to where we are right now, we have seen growth of 66.39% in Costco stock. Nothing too complicated, very simply Costco stock. Yielding a dividend of 0.57% annually. I sold out of this stock maybe like in the mid 300s at around 350 because it was going down. It was below the simple moving averages. And even though I had conviction in the company, I got rid of it just because the price was going down, and that was just the wrong thing to do. Just because the price wasn't doing anything doesn't mean that the company isn't going to do well. And I actually liked Costco more than Walmart. And Walmart really hasn't done much in the last year either. Whereas Costco has blasted off, and for good reason. Their business model is absolutely genius. I'm going to link in the description below the video that I made on Costco. Here's the thing, at this point, even though Costco has gone up significantly, I would still buy back into it even though I've missed the train, quote unquote, because I still know that Costco is a great company. Yeah, it's a lot more risky buying it at higher prices, but if it does pull back, if it does give me a good entry, I would absolutely buy back in, and if it goes down even further than that, then I'd have to average in and then not make the same mistake twice. All right, the second stock on the list is Ford Company, ticker symbol F. And this one, oh man, so I started looking at this one on the channel, I believe the end of 2020, maybe early 2021. Once Jim Cramer started pounding the table on the stock and I started looking into it, they had their EVs, the F-150, the Mach-E. I'm like, you know what? At a $45 billion valuation, which is what it was at around $10, $11, $12 or whatever it was at the time, because as we can see over the past year, Ford has more than doubled at 172, pretty much 173% over the past year. We see one spurt, consolidation, another spurt, consolidation, and then right now, over the last few weeks, another big spurt up 16%. So my thinking of selling out of Ford comes down to a couple of things. The first was all my EV money, I was willing to put it in Tesla because I like Tesla as my long-term highest conviction stock for years and years and years. Whereas Ford, even though I believe they're heading in the right direction, they aren't the clear-cut winner in EVs and the gold medal best in-breed company with the highest possible margins, growing profitability the same way that Tesla will be over the upcoming years. Then you argue valuation, the fact that Ford is a value/growth stock now, whereas Tesla is purely just a growth with a high premium on its valuation. But honestly, I just couldn't hold the consolidation, and then it just made me lose conviction in the company. Again, just because the price wasn't doing anything, I lost what I believed was fundamentally good about the company, although I did reinvest into higher quality names. In my opinion, again, Tesla, Microsoft, Apple, where you can't go wrong. At the same time, I lost out on a lot of gains at such a cheap price of $45 billion at $10 a share a year ago, and now it being $24 a share. Honestly, at the beginning of last year, I said, you know what, $20 is totally possible, but at the same time, the consolidation was so long that it just made me lose, again, that conviction. So silly on me. Same mistake as Costco. Again, just getting into trading, getting into investing, getting these quirks out early so that moving on forward that I don't make the same mistake twice. The next one being Berkshire stock. And this is another one that I was just mentioned on the channel, I believe. It was one of my stocks to buy in either December or November when it was sitting right at its 200 simple moving day average, around $280. And it had been consolidating here for quite a while, and it actually did break out at the beginning of December, and I sold out of it right around 284, right around here, right before it started to break out, pull back, and then break out even more to where we are today. You have the Motley Fool saying is the Berkshire Hathaway headed for $1 trillion, as right now it has a market cap of $700 billion. And here's my rationale actually for not holding Berkshire, so I don't feel so bad about myself, is that yes, you're buying a company with a lot of cash on its balance sheet who are receiving significant amounts of dividends, but also a way to look at it is that I can also invest in the same companies that Berkshire invests in. So they invest a lot into insurance and banks, as well as Apple stock being like their only technology company. I own Apple, I own JPM as the bank. Other than that, I still believe Berkshire is a great company, but that's my rationale behind not buying it and not holding it. But honestly, this one even rolls back even further. When I first got into the market, this one was sitting at around 160. I remember 170, 180. And just getting into investing and learning about Warren Buffett and just never buying it. It went up to like 210, 220, pulling back, still never bought it, continues grinding up, consolidates, still haven't bought it, and now going up even further. Honestly, 91% in the past 5 years. Warren Buffett has a lot of haters, people that say he's outdated, but at the same time, this man still makes money today. And the last stock, and I can't believe I'm saying this, is Google stock or Alphabet stock. A market cap of $1.84 trillion. This one I sold out of after earnings. It jumped up above like 2,000, and then I sold out around here and just watched it grind higher and higher and higher, and I missed out on what? A cool 35% of gains? Whatever. No, this one also hurt. There was no reason to do this. And I remember after the March 2020 crash, out of all the FANG stocks, Google was the one that was performing the worst, and actually just because everything was making so much money at the time, whoever was investing or trading the riskiest was getting the most gains in 2020, if we all remember. And Google just wasn't one of those high-risk stocks at the time, whereas the rest of the FANG stocks were just shooting up higher. But knowing what I know now, another mistake, just hold onto high-quality names, buy the dip, sell the euphoria, and just continue learning and moving forward. All right, and those are my biggest losses in cost opportunity. Let me know in the comments below, do you have a similar story of paper handing a name or not holding it for long enough and it eventually shooting up to make ridiculous gains? Let me know in the comments below. As always, subscribe and like, and I'll see you in tomorrow's video.